Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Consensus in Austin, Texas. Joining us for the segment, we have Rob Hadick, who's general partner at Dragonfly Capital. We're here to discuss which regions are best positioned to lead the future of crypto and Web3, and if the US is at risk of losing its leadership role. Rob, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
All right, let's talk about that. What countries do you think are the most attractive or best positioned to provide leadership roles in crypto and Web3?
So I think it's changed, or that conversation has changed quite recently. But I don't actually think it has changed that much, which is what we've seen is when it comes to developer mindshare, when it comes to retail adoption, and when it comes to institutional adoption, that's really started to happen more fulsomely in Asia. Right? We've seen Singapore take a leading role in institutional proof of concepts or things like tokenization. We've seen Hong Kong capital flows for retail adoption and trading. Korea is 8% of the world trading market right now, even though it's only about 0.64% of the global population. So that part of the world has really taken a leadership role. Capital formation has still really kind of been positioned here in the US. And that's been on hold for a little bit as we haven't had this kind of regulatory understanding or clarity. That has started to change with the BTC ETF, with the about face that has happened in the regulatory side, from Gensler to what's happened in Congress with SOB 121 and FIT 21. So it still feels to us like, from developers, retail, from institutional focus, it's in Asia and you have to be focused there. But I'm hopeful that the US can kind of claw its way back.
Yeah, it's so interesting, of all issues, to get bipartisan support in the digital asset space, but I think it's more than just that. We don't want the brain drain or the talent drain. We want to be able to innovate and not lose that leadership position. I mean, US capital markets are the most well-known and respected, right?
Absolutely.
Around the world. We don't want to lose that in the development of the digital economy either. So, we're seeing some progress there, but we don't want to lose that leadership role.
Right. No, that's absolutely right. I would actually challenge just the notion that we have a leadership role, and that's unfortunately been a big part of the concern that we've had. There's a lot of people have come here, and we see that from entrepreneurs all the time. They come here, they go to MIT, they go to Stanford, they go to Harvard, and then they go back to, they might have dual passports, they go back to Eastern Europe, Western Europe, they go back to Asia. We had the ability to take a leadership role in 21. And there was a lot of conversation around a stablecoin bill. There was a lot of conversation on regulatory clarity. And unfortunately, the face of some of that access and that outreach was Sam Bankman-Fried, and we all know what happened there. And because of the fact that we didn't really put that aside and FTX aside, and we didn't decide to really take the reins by the horn and give us clarity, Asia just kind of continued to surpass us. And it's not just on the retail side or the entrepreneurial side, but also the EU has been more thoughtful around regulation. So they passed MiCA long before we had anything that came through either a chamber or the House. And my thought is, the US is not just at risk of this brain drain and of losing its leadership role and of capital formation moving out of the States, but that's really what's been happening, and they need to catch up.
Right, because it's not just about digital assets, it's also the technology and the infrastructure that goes into developing the digital asset space. You don't want to lose the tech talent in general, right? So which investment products and sectors do you think are critical for the overall crypto market to continue to mature?
Yeah, so the ETFs have been really interesting because we've seen kind of this capital flow. It's the most successful, the BTC ETF is the most successful ETF that has ever been launched, the fastest to $1 billion. That's been good for mindshare, but it hasn't necessarily been good for developer talent, right? It hasn't been good for attracting more developer talent here. What we really need is to foster innovation in things like tokenization, in things like decentralized infrastructure. We need the entrepreneurs to say, hey, this is a great place for me to do business and for me to go and not just, not be scared to go to prison, but also to be able to raise capital, right? And what's happened so far is they've been scared and they've been moving. So our perspective is, listen, if we can get that regulatory clarity, it's the BTC ETF or the ETH ETF or any of these types of products, those will be good. But what will really happen is it'll innovate across different types of products.
Right, with the framework, and I would agree with you there. I would also argue the industry itself, the bifurcation still has to, we have to think more about integration versus being so, in this camp, right? You have DeFi evangelists, and then, and on the opposite side too, where, TradFi might be a little bit nervous with, with interacting or engaging in DeFi offerings. However, and I feel like, and having covered Consensus for 6 years, what's really encouraging about the conference this year, it's focused on capital markets.
Yeah.
We're at the World Reimagined stage behind us. It's been about crypto policy all day long. It's maturing, but in the same token, it can't also be an us versus them, and the industry also has to foster training and the education and, being a little bit more open-minded in that respect.
Yeah, I think that's right. One of the big issues with things like DeFi, like you mentioned, is sanctions violations and not knowing an identity on chain and not knowing who your counterparty is. And there are a lot of people, to your point, who are saying, okay, completely permissionless, completely anonymous, or not anonymous because you can watch capital flow on chain, but at least no KYC AML. And to your point, that we're not going to have mass adoption especially here in the US, if that's the way the industry decides that they want to push forward, right? So we do have to make sure that we are thoughtful around KYC AML. We have to make sure we're thoughtful around, working with the regulators to do something to make sure that North Korea can't easily move capital around and potentially take it off chain and fund their own operations that way. So I totally agree, and I think there's an integration that's going to happen with everything that's happening at BlackRock and Goldman Sachs and all these places on tokenization. That has to happen with all of the developers at the permissionless chains and coming together to figure out a way to at least link the two if capital isn't or your activity isn't happening on both simultaneously.
And that's a great point that you make, because another key theme we've been covering as well from virtually everyone who's been sitting in your chair is it's also about user experience.
Yeah.
They want it to be familiar, they want it to work, they want to get from point A to point B without having to worry about the underlying infrastructure, the architecture behind it, let the specialists, the developers and engineers worry about that.
Yeah.
But user experience, that's also going to be an important catalyst for continued adoption as well.
Yeah, no, that's absolutely right. So there's this concept of chain abstraction that people talk about, and one of the things that I think we all expect is that someday we won't know if we're transacting on a certain chain on Ethereum or Solana or Near or wherever. We won't necessarily have to go and sign our own signatures in a wallet. For people who are really crypto native and who want to do that and want to be self-custodial, that should be an option. And we need to make sure that we preserve that. And I think there's some worry with some of what we talk about is in the regulatory side and in Congress that's trying to go away. But I think for the vast majority of users, they're going to want to access crypto through Robinhood or some sort of app like that. And they should be able to, not have to worry about all of these things, gas fees and signing signatures, et cetera, and still interact. And we should just have a system where people can kind of get as involved and as deep as they want to.
All right, Rob, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.